Hi, this is Joseph. In just a moment, we'll begin here. Let me make sure that you're able to see my screen. Okay, perfect. You should be able to see the blue screen that reads Forex Copy Trader. All right, perfect. Okay, so before I begin, I do want to say a few things about how I operate my webinars. So what I'll do here is answer all of the questions that you might have about the service or any of the material that I present to you today. I'm going to be teaching you one of my best trading strategies that I developed back in 2001. And so if you have any questions, please, if you can, wait until the very end of the presentation. And the reason I do that is that I know that many of you have a really limited amount of time. I appreciate the time that you do spend with me. So I want to get to the bulk of the information, make sure that you have the information that you need to make a decision, whether perhaps you want to use maybe one of the trading systems that I'm going to teach you today, or if you're considering using my trade copier service. So this presentation is going to be about an hour and maybe 20 minutes approximately, somewhere right around there. And I break it up into three parts. The first is going to be the introduction. And I'm mentioning this because if you watch this on a replay, you'll know exactly approximately where to go to find the rest of the information. So the first third of the presentation will be, the introduction. I'll be talking about my history, and then we'll be talking about the trading system and the technique that I'm going to teach you. And then that's going to be the middle portion of this presentation, is showing you live trades, showing you trades that we've executed. These trades and this technique that I use, it is the same strategy. These are the same strategies that I execute for all of my subscribers who use my trade copier service. And then the last third of the presentation is where we'll spend time talking about the trade copier itself. I'll actually show you how easy it is to connect your MT4 account to my trade copier so that you can get all of the trades that I execute automatically into your trading account. So let's get started. As it reads here, we're going to talk about the Forex copy trade, and the name of my company is Best Forex Trade Copier. It's bestforextradecopier.com, and we're going to talk about how to fix the biggest problem in Forex. And the biggest problem in Forex, obviously, and you know, I mean, if you've been around for a while, you know a lot of the things that go on. I mean, besides broker manipulation, there's a lot of services out there, and you just don't know who's legit. You don't know if they have experience. You don't know if they can honestly deliver. And there's just so many people out there that are getting into the business trying to sell something. They're trying to sell all of these other traders that are coming into the business. They're trying to sell them little simple programs or EAs or signal services that will generate little systems on the charts. So this is basically for traders who are dissatisfied with the fly-by-night signal services. My trade copier is an automated trading system that provides you with the same results that a professional trader with 19 plus years experience generates. Unlike all the other signal services out there and trading systems that you install on your charts to generate a buy or a sell signal, with my trade copier, you never have to click to execute a trade to make big profits. So before we move on, I want to share a little bit of disclaimer information with you. I want you to know that my results are not typical. And the reason I say that is that I've been trading for almost 20 years now, 19 and a half plus years. And I trade every day. I mean, even on Saturdays, I come into my office and I look at my trades from the previous week. I look at the good trades, I look at the bad trades, I review the charts. And then on Sunday, I start. So I really don't take any days off from trading. Sundays I start and I conduct a weekend analysis is what I call it, and I send it out to all of my subscribers, and I let them know basically what I see as far as the bigger time frames, bigger picture, what I could potentially expect for the following week. So it's work around the clock, and I consider trading a never-ending learning opportunity. There's always something to learn. And when I talk about making money, I'm not implying that you or anyone else will achieve results, because I really don't know how much effort you're going to put into it. I can't say that because I don't know you. I don't know, how much experience you have. And when I share with you today my best trading technique, I want you to know that there's obviously going to be some things missing from it. I mean, I can't tell you that every time this particular strategy sets up that it's going to look exactly as I present it to you today. I'm going to show you some examples of recent trades that I've taken that I've executed, and my trade copier subscribers receive those trades. But what I want you to know is that if you think that it makes sense to you, please paper trade it or demo trade it. And if you have any questions, please reach out to me. So when I talk about my clients later on, please know that their results are not typical either. all of them had to do something, whether they had to figure out how to trade on their own or hire me basically through the use of using my trade copier so that I could execute those trades for them. One way or the other, they had to take some action. They had to make a decision. And all business entails risk. And when I show you numbers, profits, testimonials, and examples, they're all real, factual results, trading statements, and the testimonials. But they're to illustrate the power and the potential of my trading system. And again, in no way am I implying that the scenario I describe in these examples will happen to you or anyone else. I really don't know how you trade. So again, I'm going to teach you my strategy. Just keep in mind that if you're going to execute it, make sure you paper trade it or demo trade it. So I'm going to stop talking here for about 15 seconds so that you can review this disclaimer information. It is available on my website. Okay, so who this webinar is for. If you use the MetaTrader 4 platform, this webinar is for you. Now, I do want to say something here because every once in a while I do get some new subscribers that they're actually brand new to the business. Some of them have never even used the MetaTrader platform, but they're looking around on Forex, they're interested in Forex, and they don't want to make any mistakes, they don't want to lose any money. And sometimes they come across some of my videos. So the MetaTrader 4 platform, it is a platform that most Forex brokers will offer their clients. It's free. There's nothing to really pay for. It gives you data, price, basic indicators, things like that. And it is required that you have a MetaTrader 4 account with money in it in order to use my trade copier. That's how you would end up profiting. And then you would connect your MT4 account, which is short for MetaTrader 4, to my trade copier service. And from that point on, I would execute all the trades for you. That's why you would need to use the MetaTrader 4 platform. Sorry about that. Yeah, just one moment. I'll get to those questions. Sorry, I can see them. So again, please don't feel that I'm ignoring you if I don't answer your question here. I'm going to answer all those questions at the very end. Now, if you've been trading for a while, whether it's just a couple of weeks, a few months, or even a few years, and you're still not seeing consistent profits that you can live off of, then this webinar is for you. And what I mean by that is to be able to send home money so that you can pay bills, put food on the table for the family, and still leave enough money in your trading account to experience growth. Now, if you're also trying to learn how to trade, but you want to slowly ease into it, and you want to see proof, you want to see profits while you're learning how to trade by yourself, then this webinar is definitely for you. And if you don't really want to trade for yourself, let's say you've been trading for a while, you've already blown up a few accounts, you know that there can be money made if you're successful in this business, but you don't trust yourself, you don't feel comfortable, you don't feel confident yet, but you want the profits that Forex can likely generate, and you want someone to trade your account for you, then this webinar is definitely for you. Now, how this webinar is different than others, I am obviously going to make an offer at the end of it, and it does involve working with me and having me trade for you. But the information in this webinar is how-to material. I am going to show you how to do some things today that will make your trading easier, and then I will offer to help you with it to make sure that you succeed. I'm also going to talk about my trading system, how it works and what time frames I trade and which currency pairs. And I'm also going to speak a little bit about my history as a trader. So let's start there. I started trading back in 2001. I started like most retail traders. I wanted the work from home lifestyle and the benefits and the riches that I knew could be generated in this business. Now, I don't use that word loosely, the word or the term riches. It's all, relative to, what you feel is going to make you successful, and what I feel is going to make me successful is very, very different. Everybody has different lifestyles and different expectations, and that is the most beautiful scenario, in my opinion, because that's exactly what this business can provide. It just really does so many different things for so many different people that succeed in this business. And I was also aware of the saying when I first started trading. I was aware of the saying that goes something like this: 90 to 95% of the traders who come into this business are going to lose their money, blow up their account in the first few months. And I knew that. I knew that was a reality that I was facing, and I didn't care. I thought I was smart, and there was no way that I could lose. I was stubborn, bullheaded, and I was never going to quit. There was no way that I was going to stop. It didn't matter how much money I lost. My very first day of trading a live account, I earned $325. There was no strategy behind it whatsoever. I have to say that and make that very clear. This is obviously back when I first started trading. I simply bought when I saw price moving up. I was lucky, It kept moving higher. It was just one of those situations. Anybody can do it, right? You just, even a child can go up and click the mouse and be right on a trade or be wrong on a trade. You never know. And I happened to see $325 in my trading account, and I closed out the trade. And when I closed out that trade, I couldn't believe how easy that was. And I thought to myself, I finally found what I want to do with the rest of my life. Now, I quickly got out my calculator and I figured that if I could repeat what I had just done and add 5 contracts or 5 lots to each trade, I could make over $1,000 a day. Now, you can probably guess where this story goes. The next day when I sat down to trade, I tried to repeat exactly what I did that day when I made the $325, and I could not do it. I lost money the whole day, giving back all the profits that I earned the day before. And then the following day and for the rest of the week, all I did was lose money. It was horrible. It was sickening. It was the worst feeling to lose money like that and not have any control over it. I withdrew. I shut down. I didn't want to talk about it. Prior to that, I was pretty excited. I was telling family and friends that, I was going to do this and I was ready and I could handle it. And I was ready to go. And when people would ask me about it and how things were going for me, I didn't want to talk about it. It was horrible. So what I did was I mapped out some kind of a plan for myself. I really wasn't sure where to go with this and what to do. I didn't know if I was on the right path. Back in 2001, I had also purchased a $2,000 trading course, $2,000. It was 17 manuals, 17 CDs. It was mailed to my home. I received it on a Friday. I went through all of the material, and I was done by Sunday morning. And I realized after going through all that material that everything that I had just read and studied was available for free on the internet. The company that sold me that $2,000 trading course, they're still in business. They're in Florida. I'm not going to name names, but they're still around. And it was really, no joke, it was so basic, the information. I was like sick. I couldn't believe that I spent $2,000 on this trading course. And again, it was the same information that I was acquiring by scanning the internet and going to blogs and then going to the library and looking up, checking out books and then buying books at Barnes & Noble. So this this company that sold me the $2,000 trading course, they also sold me a chat room subscription. And I thought, I had already put that much money into it. I might as well keep going. And this chat room supposedly was an opportunity where they would call out trades and I could make some money. That's what they told me. So I paid $149 a month to be in this chat room. And they had the traders that were in the chat room calling out these trades. They were the same students, just like me, who had bought the $2,000 course. So they didn't have any experience either. They were all using basic textbook technical analysis, principles without any real experience, never being tested. These guys were calling out trades in the chat room, and I was losing money every single day, and it just made it worse. So one night after another horrible run of more trades being called out by these people in this chat room, I had lost more money. I looked down at my balance, and I thought, I can't believe the hole that I just dug for myself. Like, I was in so deep. How was I going to get out of it? And I thought, by paying these people money, all of the money that I had invested in it, that somehow I was going to learn how to trade. And it's not true, because if you're following the wrong people and they don't have sufficient experience, they don't have enough experience, they're not going to be able to help you. Like, they might be able to give you and throw you a few trades that might be lucky that work, but when the market really tests them, excuse me, and the structure starts to change, everything starts to change. Everything starts to unwind. It gets really, really difficult, very, very challenging, and it's hard to stay out of the market when you're down and you've lost a lot of money. But sometimes that's the best option. Not always, but sometimes it is the best option. Sometimes we know we shouldn't be trading. So when I canceled my subscription to this company and this chat room, I sat there for 2 days after and just stared at my charts, and I didn't know what to do. So I started making a list, and I started researching some of the best professional technical analysts that were out there. Martin Pring, John Bollinger, John Murphy, Wyckoff Method, Point Figure came up a lot, many others. And some of these people are still alive. So I was able to reach out to them, and to my surprise, and of course this is back in 2001, they reached back to me through email, like they contacted me. And this is before social media, right? I wouldn't expect too many of them to really pay attention to me today if I was just starting. But back then it was very, very new, and email was kind of exciting to get. So I started moving in that direction, and I started surrounding myself, even if it was just online, with professionals. And I refused to go to like Forex Factory and websites like that and start listening to all these people with all their own opinions that I could never validate or verify, because that's a big mistake to start thinking that you're going to learn from free videos on YouTube. It's a good place to start. It will give you some general ideas, but you got to be careful. I mean, I can't say that it's impossible because I don't know what's out there. I don't know all of it, but I would say be very careful. So I made a list and I thought to myself, first of all, I'm committed, and I said this to myself in my journal, I'm committed to this business. I'm going to do it for the rest of my life. I didn't care, and I didn't care what it cost me, what I was going to have to give up. And I was that disciplined. I've always been that way. I've always been a real hard head. When I bite down, and I hang on, like I don't let go. And it didn't matter to me. It was do or die, literally. That was my approach. So what I thought was, even if it takes me 2 to 3 years to master each one of these different methods, technical analysis from these individuals, so be it. I didn't care because I had forever to keep doing this. And I was going to work on it night and day. And I just started going after one after another. I started off with Martin Pring, John Bollinger. I just kept going. Point and figure has been around for a long, long time. Wyckoff method, all of it. And I grabbed every book that I could possibly get on these individuals if they were dead, and started reading everything I could about it, and then started talking to other current professional traders that were using these methods. And I also made sure that anybody that I spoke to had to be in business more than 20 years. They had to be in this business as a trader more than 20 years, 40 years, 50 years. Those are the people that I was associating with. I refused to talk to anybody else. And it worked. It did work. I found that the way I analyze and process data and information, the way my mind works, it was perfect for technical analysis anyway. So I am primarily a technical trader. Of course, I pay attention to economic data. I talk about it in the books that I've written. I've talked about it in the trading course that I have. I have methods for trading the news and things like that. I follow every economic report. I read them. I look at the reports. I always have. I made 3-ring binders for each one of the major currency pairs that I trade, and I record all of the data. I've been doing it since I started trading. But and my system is primarily a technical system. So the trades that I execute with the trade copier, they're day trades, meaning that I intend to get in and out of the trade in the same day, usually within the same trading session. Now, the journey to become a successful and profitable trader wasn't easy, and that is a total understatement. Many of you know exactly what I'm talking about. I studied day and night, even on the weekends. I've invested well over 80,000 hours into my trading career, and it seems like there isn't a week that goes by when I don't learn something new. But now that I'm here at the stage of my life and trading is something that I love doing every day, there isn't anything else I'd rather do, I can say that trading for a living is the greatest opportunity I've ever had in my entire life, and I want you all to experience that too. So it took me about 1.5 years to start seeing consistent results from my trading system that I could actually live off of, which means, of course, to me, sending money home every month, paying bills, and putting food on the table, and leaving enough money in my trading account to experience growth, because I didn't want to deplete my profits. I developed my entire trading system on my own, and in 2005, I started a small private fund. And as I started making money from my trading, my family and my friends wanted to know how I was doing it, so I started a private Yahoo group, and that ultimately led into my first chat room in 2007. In 2007, I opened up a website, and I started calling out trades during the London and New York session, and I started teaching my system as I was calling out trades to the people in my chat room. And it was right away, it was very profitable, very successful chat room just by itself with the signal service. But at that point, I had realized that I need to make a trading course and put it online. And that's what I did for my members in the chat room. And then shortly after that, one of them brought up trade copiers. And I really wasn't comfortable with the idea, but I thought, let's go ahead and do this because I could see the value in it, because the people that couldn't make it to the chat room and get all my trades called out, they couldn't be there live. The trade copier would actually fulfill that void. It would fill that void for them and fulfill the opportunities where I could thereby execute the trades for them and manage the trades for them while they were busy doing something else, whether they're sleeping or working a full-time job. Now, I want to share with you a couple of screens here, a total 4 screenshots of my trading accounts. These are my personal trading accounts from 2005. And the reason I'm going to share these screenshots with you is to show you that I've been consistently trading like this for many years. My success is not something that I just recently stumbled onto. Over the years, I've improved my trading method and far exceeded all of my financial dreams. And I've deleted some of my withdrawal and deposit amounts for my own privacy in these statements, but the statements are real. This is my live account. This is not a demo account. And I have not changed anything except erasing the amounts of money I withdraw or deposit on these screenshots. This is 1 day's trading. This is in the morning. This is California time, 8:49. You see I closed that one trade, and then it goes all the way to 9:28 in the morning. And I had a total of 4 open positions. Now, obviously, you can't make, one trade of $12,700 on a $15,000 trading account. I was trading a pretty substantial trading account as far as capital goes. And on this particular day, April 12th, 2005, it was very different. When I closed out these 4 trades, I sat back and I thought to myself, wow, nobody's ever going to be able to take this away from me. I'm really, really comfortable with who I am and what I've become as a trader and my ability to be able to provide and do this anywhere. And I had a personal friend that was just always after me. I mean, he just kept telling me, I need you to teach me how to trade. I need to do this. I want to do this. I had other friends that, said that they wanted to try it. They'd come over. They'd trade with me in the middle of the night. And then, by 2 o'clock, they're falling asleep. They're thinking, I can't do this. I can't do this. I can't do what you do. You've got to have this endless amount of energy. I can't do it. But this one particular friend was saying, I want to do this. I really want to do this. And I really wasn't too sure that I wanted to be distracted. I wasn't comfortable with the idea. But this day when I sat back, I thought, I'm ready. I'm ready to do this. I'm ready to coach. So I started actually coaching in 2005, but in 2007 is when I opened up my chat room, open to the public at that point. And these 4 trades that you see right here, totaling $40,000, again, that was real money, not demo money. I could touch it. I could spend it. These trades are a specific technique called the continuation breakout trade, and that's what I want to teach you today. I'm going to teach you how to do this, execute this strategy. Obviously, the profits are going to be different because of the amount of money in your account. You may end up having or seeing larger profits than this. It's very, very possible depending on the amount of capital that you have in your account. So this is another screenshot. This was back in March, same year, 2005, but this was March 10th. I had earned about $11,250 that day, a little bit slower on that day. This was March 15th, March 16th, you see there. You can see my balance there, $612,000 at that time. This was back in 2005. This was not, this was my personal account. This was not my managed fund account. And then on March 23rd, $23,250. So these were pretty consistent. And again, some of these other trades that you see here, they're different techniques. I have many different techniques for different types of market environments and different strategies. I'll talk about those in just a moment. But I want to teach you the continuation breakout trade. And what we're also here to talk about is my trade copier, my MT4 trade copier, and why this matters to you and how it can help you finally earn profits from trading, regardless of what your past experiences have been. If you already have some experience as a trader, then you know how difficult this business is. Ray Dalio recently in an interview said, and I'm just paraphrasing, this isn't exactly what he said, but something to this effect, that it would probably be easier to win an Olympic medal than to become a successful trader. Now, for those who don't really know much about the sacrifices and commitments, so if you're new, that successful traders make, it can seem that the really successful ones are somewhat withdrawn, self-centered, always protecting their environment. They do everything in their power to limit outside influences, and they work harder than most at learning everything they possibly can about the markets, keeping up to date on market events, and continuing their education forever. I've spent my entire life trading, 19 years, doing exactly this. I've committed myself to understanding this basic understanding that I will always continue to learn how to improve my trading. There is no mastery, there is no top level for me. In my opinion, I could seek out the best trader that I could find today and want to know everything that I can from him, and then try to exceed that and keep going, and then look for the next one. I see it as a never-ending experience and constantly learning to improve. That is what has brought me to this level, in my opinion, and that's what I needed to do. But we know many people like that. I mean, the best professionals at anything, live this kind of lifestyle. You really need to protect yourself. And I say all of this because I want you to understand that trading is not easy. I know that there are some people out there that have only been trading for a couple of years. They're trying to sell some simple EAs and systems and trade service, signal services that they create. Just real basic. I see it. It just makes me cringe. And then they tell people it's easy. It's easy. And then maybe on their Facebook page, they'll have a few people that are standing in front of brand new cars, and they say that this person bought my signal service, and they bought a new car. I've seen that. I've actually seen that. Like, I've seen some really crazy things out there, and please be careful. Anybody that tells you that trading's easy is lying. Again, I told you that I surrounded myself with people that have been in the business for a long time. And I still have friends that have been in the business for 40 and 50 years, and none of them will tell you that it's easy. And none of them will tell you that a simple EA or some kind of system that generates buy and sell signals on your screen is going to make you the money that you want or allow you to operate a managed fund. And I think that most of you know that by now. But for those of you who are new and those of you who really don't have a good understanding, please beware that there are people out there that will simply try to tell you that it's easy so that you'll hand over your money and buy something real simple from them. And they're not trading for you. It's just an automated system. Now, you'll notice that I'm not talking about automated or black box systems. That's not what my system is. My trading service is me trading for you. But there are black box systems out there that sort of do it on their own. Some are based on like indicators that you install on your charts, and they generate buy and sell signals, and they tell you when to trade. And there's no trader behind that. It's just an automated system. I'm not going to say much about those other than they don't work. And if they do work, they only work for a little while. There's not a week that goes by when I get a Trade Copier subscriber that tells me that they were using a black box system like this or some automated system, and it blew up their trading account within the first few hours. Other people will tell me it worked okay for the first couple of weeks, and then it stopped working. And that tells me that, you know, when price and when the market starts to shift and the price structure starts to change, and it's constantly changing, these black box trading systems, they stop working. They're usually built on moving average crossovers or simple indicators. So you got to be careful with that. Needless to say, again, successful traders and fund managers aren't using these systems that inexperienced traders on Facebook and YouTube are selling. They're not going there to find their systems to make money for their subscribers. So this is what we're going to learn on this webinar. I'm going to show you my best trading strategy. It's the one that I use for day trading breakouts. And I specifically mean day trading. It can be used for swing trading. You can trade it off on the, you can use it on the 4-hour chart and the daily time frame. I'll show you an example of that. But primarily for this example, we're going to talk about how you can use it on the 1-hour time frame for day trades. So you want to execute this strategy on the 1-hour time frame. It's safe and it's very profitable. Now you've probably, if you've watched some of the videos on my website, you've probably heard me say that this system, this technique, the continuation breakout trade, is accurate 90 to 95% of the time. And I truly mean that, and that is based on 19 plus years of executing trades and analyzing those continuation breakout trades. Whenever they fail, it is because I miscalculated something. I can always go back. This strategy is so structured, and I created it that way. I insisted on it being this way. It is so structured that if a trade fails, I can go right back to where I got into the trade on the signal and then find out where the mistake was. And there's always an obvious mistake whenever a trade like this fails. And then I simply just work on my behavior to make sure that I don't make that mistake again. That's the kind of system that I built. I know that there are a lot of systems out there that say, oh, you know, you'll do just fine if you can accept that you're going to learn, you're going to maybe earn 50 to 60% of the time, but if you can minimize your losses and cut them quickly, but let the winning trades run, you'll do okay. Well, that's such a vague concept, especially for somebody who's new in this business. They have nothing, no point of reference, nothing to be able to compare that to. And it made me mad when I read that because I thought, well, that's not helping me at all. Like, that only makes sense to somebody who's been around for a while and has lost a lot of money and has earned some money along the way and is trying to build their own system and understands market and price structure. That's very, very difficult for a new person to understand and to grasp. But the best thing about this particular strategy is that it has a very precise entry, take profit level, and stop loss placement. I'll show you exactly what it is. This strategy is called the continuation breakout trade. So here's what you need to make it work. Number one, for day trading, you need to use the 1-hour time frame. Please do it exactly as I share with you today. If you change any of the variables, if you change the settings on the indicators, if you don't use the indicators, if you change anything, I cannot tell you what kind of results you're going to get, because this is the way that I use it. This is the only thing I do when I execute the continuation breakout trade. I created this system. I tested it. I scientifically created it. I had a video journal, a written journal. I worked on it night and day. I actually built my trading system on a live trading account, meaning that I used real money. I think that that's a very irresponsible way to approach it, and I wouldn't recommend doing it, but that's what I did. And I did it because I know my personality and I needed to make it real, and if I was going to lose money, I needed to feel the pain. I'm one of those that just, it can take me a while to back up, and not necessarily that I'm going to continue to make the same mistake over and over again. Each time I like to analyze the information and see what changes I can make. But when it comes to trading and it comes to the psychology behind losing money, it can become, and then you throw in your emotions, it can be a very, very dangerous situation, and you can end up doing the same thing over and over again, even if you're trying not to do the same thing over and over again. So you have to be careful with that. But again, I highly recommend using a demo account if you're going to create your own trading system. There are two indicators. There are actually three. One is right with the candlesticks. It's the Bollinger Bands. And then the other two indicators in the bottom of the chart are the CCI and the MACD histogram. I'll show you exactly what they look like in just a moment. Now, the price targets on the majors, the euro dollar, pound dollar, dollar Swiss, dollar yen, it's a 55 pip target, but I use a 55 pip stop loss. So it's a 1-to-1. And when I'm talking about targets, I'm not talking about double counting. So if, let's say, I took 2 lots on the trade and I closed the trade at 25 pips, some people would say that that's actually 50 pips. And I agree. I guess technically that's what I'm earning. But to me, to report that is sort of deceiving in a way, because you can't really understand how far the price traveled and where you locked in profits when you start. I call it double counting, meaning that, and I see this all over the place. So there are people today all over Facebook, YouTube, they'll say that they made 300 pips, or let's say 100 pips, and they'll get into one trade and they'll make 20 pips on the trade, but they have like 5 lots on the trade. So they'll call it a 100 pip trade. And technically, I guess you can say that they earned 100 pips. But the problem with it is that if you're trying to analyze that particular strategy, or if you want to use that service, you don't know how much it's really generating. I knew that was going on back in 2001 because I went to websites and they did that to try to sell their services. And I considered it on some of these websites. And they would say that they made like 150 pips and then on the euro dollar, and I'd look at the euro dollar and I'd think, well, it was inside a consolidation all day, and it from the high to the low for the whole day, it didn't exceed like 35 pips. How the hell did they make 150 pips? And it was because they were double counting. They would put on like 4, 5, 10 lots and like that. So we're talking about from the entry to the actual target on the chart, like what we see, the price levels on the chart. So I'm not double counting. I never double count like this. Now, things get really interesting when I execute this strategy on the euro yen and the pound yen. On the euro yen, the final target is 150 pips, but I scale out at the first 80 pips. If you're using one lot, I would recommend just scale out and close the whole position at the first 80 pip target. But it can and very often goes to 150 pips. And I'm still using a 55 pip stop loss on the euro yen. And on the pound yen, the final target is 250 pips. I scale out at the first 150 pips. And I'm still using a 55 pip stop loss. So on the yen crosses, that stop loss, the fact that I'm using 55, well, this is more than 1-for-1 reward to risk. So the reward to risk is much more better balanced in my favor when I trade the yen crosses. Now, there's a few rules here. You absolutely must wait for the candle to close before considering or analyzing the trade to get a signal. The candle has to close on the 1-minute chart. I'm sorry, the 1-hour chart. It has to close. Do not look at an open candle waiting for a breakout and then assume that you know where that candle is going to close. I used to do that when I first started trading. I did it all the time. I was always assuming that it was going to close above resistance or close below support, and I would either buy or sell, and then I don't know how many times, it just happened to me over and over and over again, the candle would not close above resistance or below support, and it would go back inside a consolidation. I would get stopped out because it would create that head fake situation. I call them head fakes, but some people call them whipsaw or whiplash. It's where price looks like it's going to break out and then it goes back inside a consolidation. That's a frustrating situation. So you got to wait until the candle closes. I'll show you what it looks like. All indicators must confirm, and there cannot be any divergence in the indicators. I'll show you what that looks like. The biggest factor in confirming this trade correctly is having the ability to identify and to quantify consolidation. That is where I started. When I left that chat room that I mentioned where I paid $149, that was where I started. I kept getting stuck in these head fake moves. They kept calling out these trades, and I was getting in these head fakes all the time, and I hated it. That's where I lost most of my money. And I started off thinking, okay, well, I see the consolidation that's in place before the breakout, but how do you know which high or low inside of that consolidation would actually trigger a candle that causes the breakout and then the trend that develops in the direction of the breakout? So I had to put some structure into consolidation. I didn't read this. I just knew I needed to do something. So I started off with the 30-minute and the 1-hour time frames, and I started looking. I didn't do anything. I just started looking at patterns. I started looking at the number of candles inside of a week. I needed to pick some kind of a time frame. And of course, I didn't know if I was doing the right thing in the beginning. I just knew I needed to work with enough with the parameters that I was using for a lengthy period of time to generate data and results so that I could correctly analyze it to decide if it was wrong or right and if I was on the right path. And that was a really interesting situation for me to be in. I'd never been in a situation where I was going to do something for an indefinite period of time, not knowing if I was going to be doing the right thing or not, risking my money and deciding that I was never going to stop until something started to make sense. And I didn't know when that was going to happen. There was nobody there to tell me if that was going to work or not. So I created structure around consolidation on the 1-hour chart, and it needs to be in place for at least 7 to 8 hours. And that's approximately, one trading session or so. And the range, so the high to the low of that consolidation, it needs to be larger than 55 pips. If it is less than 55 pips and a candle closes outside of that range, very often it'll turn around and go back inside of that consolidation if it's too small, the range from the high to the low, and it creates that head fake. So I was constantly looking for ways to filter out some of the trades that look like signals but would end up ultimately becoming head fake moves where I would get stopped out. I was looking for ways to filter. And this is part of the rules that I created and put in place. These are all important to prevent head fakes, and I'm going to show you a few other rules here once we actually look at a chart. So let's take a look at some now. What I'm going to do here is I'm going to pause the screen, and you're going to see the slide that reads the continuation breakout trade, let's go. I'm going to pause this, and I'm going to open up my charts, and I'm going to show you some live trades here, and we're going to review the continuation breakout trade. So I think I'm ready here. Now we're ready to go. You should be able to see my screen, my charts here. We're looking at MetaTrader. This is the pound dollar. This is the 1-hour time frame. This was back on June 17th, June 18th. This was just last week, or about a week or so ago. And this was the 1-hour time frame. So I want to walk you through this continuation breakout trade. It is compressed here. I'm going to show you exactly what I was doing. But I want you to keep in mind a few things. This one is a little bit different because the consolidation is quite large, as you can see. After these dotted lines right here, where I'm moving my cursor, that marks off the end of 1 week and starts off the beginning of the new week. So you can see after the market opened, it made a run for the low, took out Friday's low, printed a new low, and at that point I had a new low for the week. And then it proceeded to move higher. Now there was really no continuation breakout trade here that I would consider trading, not even to the upside. I do have another strategy called the Tech 1 trade. The Tech 1 trade developed right here and allowed me to trade it to the upside. And the Tech 1 trade developed right here when it retested resistance earlier in that week and allowed me to short it. So these were not continuation breakout trades. And I only bring this up to you because I want you to know that there are other strategies other than the continuation breakout trade for different type of market structure and conditions. Tech 1 trades, I can trade off of support and resistance. Continuation breakout trades, I can trade breakouts. It's just that simple. A few other strategies that allow me to trade inside of consolidation. But for the most part, again, for most of the week, I really didn't have a continuation breakout trade. And this was one clean low and high relative to this time frame. And I would consider everything else sort of moving sideways after that. And that's what it did. So for about 2 days here, it started to move sideways. And then as we approached Thursday, it started to drop and break down here. Now, this was as a result as we were leading into the Bank of England. So let me open up the charts. And I'm going to go to the actual signal. So here you can see there's the week's low. There's my Tech 1 trade, that white candle here to the upside. There's the high that it printed. And here is the Tech 1 trade to sell it. And now I'm just waiting. Things are going sideways here for a couple of days, about a day and a half. And then we start to get into the, we're starting to approach the London session on Thursday, which was the Bank of England rate decision. So let me move the candles a few over here. Sorry about that. I didn't mean to, sorry the way it's moving around. It's my mouse. Let me shut that off. And this candle right here, so you can see where the weekly low is. I'm all about support and resistance. I want to know where the weekly high is, the weekly low, yesterday's high, yesterday's low, monthly highs, all of it. 4-hour highs and lows, daily charts, weekly, all of it. I want to know where these are. But for day trading, this is what I'm working with. This is the data. And this candle right here, you can see that price spiked up, created that tail or wick. Some people call them wicks. So this was the reaction to the Bank of England. People tried trading it as a news event, and it collapsed, rolled right back down. I could see volume moving right back into this support low for the week. And all I had to do basically was just wait for the candle to close. I watched it bounce around, so I have a couple of options. If it doesn't close below that support, it could be a Tech 1 trade, and I could trade a bounce right off of that support level. Similar to what I did up here, just in the opposite direction. I was thinking that. But if a candle closes below support, well, then I know it could potentially turn into a continuation breakout trade, and it could continue to trend in the direction of the breakout. So this is what I need when a candle finally closes below that support low. So let's bring this together. Let's get rid of that candle. That's the signal candle, the continuation breakout trade. So on that closed candle, when it finally closes, the first indicator that I look at is the Bollinger Bands. The Bollinger Bands absolutely have to be separating away from each other when that candle is closed. They absolutely have to be separating away from each other. That shows me a sign of strength. Now, I would much rather use volume. If you could use volume, I would much rather look at volume than just the Bollinger Bands. That would give me a better indication that this is likely to continue in this direction. We need volume. As traders, we need volume and we need participation, that momentum, for price to cover a specific distance. The further it goes, the more money we make. If there's not enough participation, if there's not enough volume, if there's not enough momentum, it's going to go sideways and flat. And we're not going to make too much money. We're probably going to get chopped up and probably stopped out, depending on where you get in, where you get out, that kind of thing. So in order for me to think that this is likely to continue in the direction of the breakout, again, I would like to see volume. But if you put volume on MetaTrader, it's argued that it's tick volume or it's your broker's volume. And that's not accurate enough, in my opinion. A quick tip that I mentioned to a lot of people, I trade futures. So I trade futures as well as Forex, and I trade currency futures. So I trade pound futures. And when this candle was actually closing, I had another chart open that I was looking at pound futures and the volume levels. And I could see that volume was moving back in, and I was getting the participation that I needed to confirm this candle. This can be executed without the use of volume with these three indicators if you do it right. But it does give you an extra level of security and confidence in the trade. Now, when I developed this method, I knew that I needed volume, and with MetaTrader, I didn't trust their volume. So the only thing that I could do was use the Bollinger Bands. And I studied Bollinger Bands to figure out that on a breakout like this, this is showing a sign of strength, which is that momentum that's behind this move. And that gave me the confirmation they have to be separating away from each other. If that top band up here, the top Bollinger Band, if it was pointing down in the same direction as the bottom band, then it will typically mean it's going to be a head fake and it turns around and goes right back up inside a consolidation. And I will not execute a trade and short it if the Bollinger Bands are not separating away from each other on that closed completed signal candle. The next indicator that I look at is the CCI. There cannot be any divergence. And then the following indicator, the last indicator, is the MACD histogram. There cannot be any divergence there. So all three of these indicators have to be confirming. So that's the signal candle, but that's not where I get in. Sometimes the next candle, it could open exactly where it closed and turn around and go right back up, and it won't go one pip lower. And it'll go right back up inside a consolidation, and it'll turn into a head fake, right back inside a consolidation. And I want to avoid those. That's a head fake to me. So one of the rules that I put in place is that price has to take out the low of the signal candle by 3 pips. If it does not take out the low of the signal candle, the confirmed closed completed signal candle. If price does not take out that low by 3 pips, then I cannot execute this trade. It absolutely has to be at least 3 pips, no greater. You don't want to let it go 10 pips because it'll eat into your profits. I started off with 10 pips and I realized that it was just eating into my profits, and I scaled it back and I tested it to 7, then I tested it to 5, and then I settled on 3, and I've been using 3 since 2001. It's always worked like this. Now, the entry, if the low is 1.2441, I can't get in until 38. Sometimes on the next candle, it won't give me the 3 pip entry, and I have to wait 1, 2, 3, 4, 5 hours, and it'll curve around, and then it'll eventually come back down, maybe with some more economic data later during the New York session or something to that effect. So let me take this out a few candles, and I'll show you exactly what happened. In this instance, on the 18th of June, it gave me the 3 pip entry on the very next candle. And what I want you to notice is that it retests the level that it broke out of right after I got into the trade. And that's okay. I expect that. I'm using a 55 pip stop loss and a 55 pip target. I accept the risk at the time that I get into the trade. And I know that if I've done everything right, this trade's going to work. 90 to 95% of the time, this trade's going to work in my favor. So I just let it work. I have to let it do its thing. The fact that it's retesting the level that it broke out of is healthy. It is very, in my opinion, it makes me much more confident in the trade. I need and I want to see that. Now, sometimes it doesn't happen. If this was economic data and it was major, it could just drop. On the very next candle, it could just keep going. It happens. We see it happen every once in a while. I trade and use this strategy with non-farm payrolls, FOMC, when it makes itself available. But it doesn't always happen with those events. I just have to wait. So in this instance, again, the take profit level was going to be the 1.2383. I'll show you where my stop loss is right up here, 1.2492. So I'm using a 55 pip stop, 55 pip target. Now in this instance, things flattened out and went sideways. I could see the volume coming back in, and I expected that it was going to go a little bit lower than where it went. It went as low as the 00 and stopped, and I needed 83. So it came pretty close, and then it went sideways, and then I had to hold. Sometimes that happens. Sometimes these trades will pay off in about 2.5 hours. Sometimes they'll pay off in 5 hours, 7 hours, or in 24 hours. Sometimes. It just happens. Structurally, there is nothing wrong with this trade. There is nothing to worry about it. All it did later on, before it started to make another move to the downside, was retested the level that it broke out of one more time. It was just another retest, and then it dropped. There's my stop. So I had nothing to worry about. The thing that you need to keep in mind when you see something like this is that you need to be looking at what's actually happening, not what you want to have happen. And along the way, you've got to keep your mind clear. You've got to be realizing, okay, it's a retest here, it's a retest here, that's all it's doing. None of the candles have closed above that resistance, everything's fine. And then it makes its move a lot lower, because during this time, you're looking at it, you get tired, you're looking at it's another 12 hours, you didn't sleep maybe the night before because you were trying to trade, all kinds of things can go on. And it changes the way you think, it changes the way you look at things. You don't want to let that happen. You want to pay attention to the structure and make sure, is there really something to be concerned about? Or is it just one of those scenarios? This is not normal. This doesn't usually happen where it takes this amount of time, but it does happen, and I wanted to show it to you because it does and it can happen. So this trade worked out just fine. It's just one of those instances that on that particular day, it flattened out and just kind of went sideways. They usually work out and pay off a lot faster than this. Let me show you another example, and it was pretty much on the same day on a cross pair, the pound yen. I think you're going to like this one because this one was 150 pips. So this is the pound yen, and this is the same time, right? There's the 17th, the 18th, and the 19th of June. Here is, let me go ahead and set this up. Sorry about that. I did move it because here we are currently. And there's my consolidation range now. Remember how I was talking about consolidation? This is the current live candle. And price is just sideways inside of consolidation. So I don't have any continuation breakout trades right here. But this is one price swing, in my opinion, from that low of the week to the high of the week. And this is it. So right now I'm preparing for a possible continuation breakout trade outside of this range, but I don't have one just yet. But there was one last week. So let me move this around for you and show you how this worked out. So there's the low right there, right? We've got the low at 48. I stuck it there at 50. Let me move it down just a little bit more. There we go. And there is my signal. Now I'm going to open this up and I'm going to show you exactly what happened. So you can get a real close-up look. Sorry about that. Sorry, I'm moving things around so much. All right, so here's the basic setup, the way we saw it on the pound dollar. This is that low for the week. There's the high. There is the move off of the Bank of England. But you'll notice on this candle, on this pair, the pound yen, it gave me a signal on the same candle as the Bank of England. With the pound dollar, it gave me the signal an hour later. So I was able to execute this trade 1 hour earlier. I had to wait an hour later for the pound dollar to give me the signal to sell. This one gave me an opportunity here. So I know where the low is. Let's go right to that candle. Sorry about that. Right here. Yeah, it's my mouse. Anyway, see if I can get this in here just right. There we go. So once again, the candle closes below support. It didn't close deep, but it closed enough. It closes below support. I know where my low is, 133.43, so I can't get in until 40. 3-pip entry. There's 40. Bollinger Bands are separating away from each other. Now, the CCI looks a little bit divergent, but I know that it's okay because of the move that took place before. It shot straight up and went right back down, and I would expect that. That was just me with the experience that I have of using the CCI over time. But there was no divergence here in the MACD histogram. So in some cases, 2 out of 3 indicators confirm if I can see that there was some kind of interesting move that sort of skewed the pattern here on the CCI. It's fine. It's going to work. It's fine. Again, volume levels coming back in that I was able to see with the futures. That's another reason why I look at futures volume on the pound. I was also tracking the yen at the same time. All of this was lining up. There's my trade. 133.40 is a 3-pip entry. On the next candle, I get my entry. And it starts to drop immediately. And it goes as low as 132.87. So you can see this is a good trade. We're already up like 60, 65 pips on that trade. It's a 150 pip first target. And then it's a final 250 pips. So the way I trade it is I get in at the 133.40 and I close half of my position at the first 150 pip target. It's over here to the right. Sorry about that. I thought it was going to be just below so you could see it. I'll move the candles over. Once it hits the first target, I close the first half of the position, and then I set the second half of the position at a break-even stop. If it continues lower and the trend's strong, it'll go to the second target of the 250 pips. If not, then I make sure that I lock in and bank the 150 pips. It's important that you take profits at these levels. The 55 pip targets, the 150 pip targets, the 250 pip targets, 80 pip targets on the euro yen, all of it. I calculated that. I didn't just pick these numbers out of thin air. This was another process that was scientifically tested when I put it together. You can see how lengthy it was, the time and how time-consuming it was for me to build this, just this one strategy alone. So once I had the basic entry and the structure of consolidation, and I could quantify consolidation and all of these things in place and figured out the right time frame and the indicators after studying them and learning them, then I had to figure out, well, how long could I hold on to a trade? Because sometimes I would get into these trades and I would hold too long. And I would be up like 50, 60 pips, and I'd say, okay, this is great. Maybe I can get 80 pips. I didn't have any reason other than I just picked a number. And if I held too long, the whole thing would reverse, and I would give back all the profits, or it would turn into a loss. So I didn't want to do that. So then I started measuring and studying daily average trading ranges. So these are very different, right? The pound dollar, the pound yen covers a greater distance than most of the majors, like the euro dollar. It will cover a much further distance than the others in most cases. And I needed to factor that in. And that's why I was able to calculate these numbers. So when I picked the 55 pip target on the euro dollar or the pound dollar, I specifically tested that over and over and over again to make sure that if I get into a continuation breakout trade based on the entry, will it go another 55 pips within 24 hours or less? I needed to know that. There had to be a number. It could have ended up being 40 or 30 or whatever it might have been, but it's always been 55 pips, always keeps me in the trade. So that is why I say when you use this strategy, if you change anything, even if you change the take profits, well, you're getting different results. You're doing something a little bit different than me, and there's nothing wrong with that. All I'm saying is for me to be able to tell you, yes, it will work like this, you got to do it just like this. That's what I'm getting at. So just be aware. Change it if you want. Of course, that's the beautiful thing about trading. I've always said that there's as many ways to trade as there are traders, and that's perfect. Like I teach this method to many people, and they always try to change it a little bit. Sometimes they change it and they go, it didn't work, and then they come back to it, or sometimes they might hit on something that just makes sense to them, and then it's sort of different. Like it's not really a continuation breakout trade. They do some different things with it. But if you want to do it the way I'm showing you here, this is what I know because this is what I do. This is what I created. So let's take it out a few more candles, and I'll show you where the targets are. Let's see if I can bring that there. The target down here, the final target was 131.90. So it starts to move. You know, we get really, really deep into the trade, and we're up a lot of money. You don't want to give that kind of money back. And then it starts to make its retracement, similar to what the pound dollar did. There's that final test. Sorry about that. One more time right here. And you'll notice that there's the entry at 40, and that final test right there goes up as high as 23. So it didn't even go back to where I got into the trade. So I'm using a 55 pip stop loss, and it was never an issue. Like it never even tested it. It wasn't anything I even had to worry about. So you could, I know it's hard, but sometimes people will look at this and say, well, that's a lot of time. Like I need to sleep. What am I going to do? And I would just recommend setting in, you know, alerts, price alerts if you're concerned with it. But again, this works 90 to 95% of the time if you do it exactly as I show you here and with these indicators, and you don't change anything. So this one took a little while longer, and just before the close on Friday, that candle right there went as low as 81, and my target was 90. And I had to manage this trade right into the close. So again, this isn't normal, the amount of time that it took, but to be expected. Normally, they'll move a lot faster and work a lot quicker than this, but it worked. And at that point, then I set it at break even, and then you notice what happened the following week, and it went all the way back up here, and I got stopped out at break even. So I didn't lose on the second half of my position. I didn't lose any money, but I banked the 150 pips and locked that in, and that's why we take profits at these levels that I've calculated and I've measured, and I know they reach those levels. Now, I will share another tip, and this is for those of you who might have a little bit of experience with this and might even be wondering about it. Very often, these technical targets that I find, not only did I measure them based on daily average trading ranges, but I use point and figure charts. I'm not going to teach point and figure charts in this presentation, but I will let you know that it is very accurate, and it even confirms my expected take profit targets on what I factored in. So I started factoring and figuring out these targets before I started using point and figure, and then the point and figure started lining up, and I thought, this is amazing. Like this is just like, it's almost like when I say use currency futures volume to confirm breakouts if you're using MetaTrader and you're trading pound dollar or pound yen. You know what I mean? It just gives you that extra level of confidence in the trade. So this was just perfect. This was just a perfect opportunity, 150 pips. You might remember a video that I posted a while back. It was probably about 3 weeks ago, I believe, maybe a little bit further than that, right around there, about 3 to 4 weeks ago. It was on the dollar Canadian, and we earned 171 pips. 171 pips from the entry to the final target. It was not double counting. And that was a continuation breakout trade that I was able to find on the 1 hour chart, but it was also one that set up on the 4 hour chart. So now what I'm going to do is I'm going to show you a trade that set up on the daily time frame, just to give you a quick idea of what it looks like. Let's see if I have it over here on this page. This is my pound. No, that's not going to be here. This is my pound yen page, but I believe I have it over here on the daily majors. Let's try this one. So here it is. All right, so this is the daily time frame for the pound yen, and I'm going to detach the charts here so I could walk you through this real quick. So right here you can see the structure, the A, B, C structure. This starts, and this candle, that candle that creates that high, that was December 12th, 2019, and then it creates consolidation. The same structure is exactly what it would look like even on a 1 hour time frame or a 4 hour chart. It's all the same thing. I need to identify a range of consolidation and then wait for the candle that breaks out of that range of consolidation. And there it is right here. And that gives me my signal. That's the signal on the daily time frame. I'll put my crosshairs right there on that candle. And you can see the Bollinger Bands are separating away from each other. There's no divergence in the CCI, and there's no divergence in the MACD histogram. Now I waited for a 3 pip entry. I expected the retracement. Now the stop loss obviously is not going to be 55 pips. This is different, and you got to be paying attention to that. If you're going to be using this on a daily time frame, you got to be paying attention to where your stop loss is. But the targets are also much, much larger. So with an entry of 137.50 approximately, it was 48, but we'll call it 50, 137.50 to 130.24. This is a massive trade. And this trade actually went lower, as you can see. And when I use point and figure to calculate this structure, it gave me an even further reading. But what I'm using here, and one of the simplest ways to gauge some of these targets, is to use the Fibonacci tool and then watch the depth of the retracement. Make sure that it's structured and it's contained. It held here at the 50. And this gave me a projected target here, an extension target, which was the first target that you see here, right there at the 130.24. That was a Fibonacci extension target with the Fibonacci tool. But the point and figure charts gave me an opportunity to trade it for another 300 pips lower. That was an amazing opportunity, but you can simply do it. I know that point and figure can be very difficult for people to understand, so just use the Fibonacci tool. Fibonacci tool with the Fibonacci extension, so you're measuring and gauging the depth of the retracements, making sure that it's contained, and that will give you an idea of which extension target you should trade it to. The deeper the retracement, the closer the target I want to trade it to, and I'm expecting that it's going to stall and lose momentum. But the more shallow or contained the retracement, let's say to the 50, the further the extension and the more it has the ability to drop. And that's why I was able to trade it to that final extension target here or my point and figure targets. But this will give you a pretty good idea and a pretty good place to start. And the same thing can be done here on the 1 hour time frame. One of the biggest things that, the biggest mistakes that I see pretty consistently is that people use the Fibonacci tool at the wrong locations. And they're not, you know, it's sort of an art or science, I guess they say at the same time, but it's experience. It's experience, and then only use it, because I won't use the Fibonacci tool inside of consolidation like this. It doesn't make any sense. But that was a clear high. I was able to indicate or confirm that it was a high at that point. And then I wait for the pullback. There's my B low. There's my C retracement. And then it creates that structure for me. And I just leave my Fibonacci tool. And I don't know at what point it's finally going to break, but I'm watching the structure here, and then it starts to finally break down and gives me my continuation breakout trade. Now, you can see that was a pretty big candle. Sometimes they don't necessarily cover a big move like that, but nevertheless, it's still, as long as it closes below that B low, that's my low of consolidation, and that's my signal. This pattern actually developed back here in a year earlier. There's another one right here on the daily time frame on the pound yen. And this was it. This was the A high, the B low, the C retracement. I traded this with some of my coaching students. This was back in March and March and April of 2019, and then it broke down in May. And this gave us an opportunity to trade it for 800 pips. And again, there's the Fibonacci retracement. It held at the 618. There was my extension target. I remember the morning that it was actually hitting that extension target. One of my coaching students said, "Now what? Should we hold on to it, or should, you know, where do you think it's going to go next?" And it was obvious that it was going to be the annual low, which was the January 2nd, 2019 low. And you can see here, right there, it hit, and then it went even lower. And of course, point and figure was giving me an opportunity to trade it much lower. And that's why I had told them, obviously, that low from the year is going to be the next obvious price magnet or target. And some of my coaching students were able to hold on to that trade even longer. This is a daily time frame. So the strategy, the continuation breakout trade, does work on the daily time frame. But it's an amazing trade. I mean, I use it on the Australian dollar. I use it on the dollar Canadian. I use it on all of them. The only difference that you need to be aware of, and the only thing that you need to be thinking, is that the fact that it's a breakout trade, and if I'm using it on a 1 hour time frame, obviously obviously I'm not getting continuation breakout trades every single day, all day long. This is the pound yen currently, and it's just been inside of consolidation all week. I don't have any continuation breakout trades here. There are times, though, I say that the markets change, right? Price structure shifts, whatever it is. There's a reevaluation in these currency pairs that affects the markets across the board. And sometimes I can have, and I've had, 3 continuation breakout trades in the same direction on the pound dollar or on the euro dollar or on the dollar Swiss. 3 of them all hitting the 55 pip targets in 1 week. I've even had 3 continuation breakout trades in 1 week on the pound yen, and they've all hit They're 250 pip targets, all of them. So 3 of them in 1 week, paying 750 pips in 1 week on the pound yen. I did that a few times during the global financial meltdown. That's really when I was tested. I actually had a chat room at that time. I was calling out trades during the global financial meltdown, using this strategy, using this technique, and teaching people in my chat room, and they were doing the same thing. And when the carry trade was unwinding during the global financial meltdown, this strategy worked beautifully. It was an amazing opportunity. So many of you have told me before, I've done many webinars where I've taught this technique, and so I know that many of you have told me, and so you might be thinking this, you're doing something very, very similar. You understand what I'm doing. You kind of, I get that quite a bit. You kind of get where I'm going. You kind of see the structure, but you hadn't put enough structure or detail to it. So if you have any other questions, if you've got any questions about it, please send me an email. Don't, go straight to your live account thinking, I got it figured out. He gave me the one missing piece. Please be very careful. The next time we see a trade, it's not always going to look the same. There's always a little bit of difference. There's something different about the structure. It's the overall structure and the way I structure it with the rules, right? The 7 to 8 hours of consolidation minimum, the high and the low needs to be a specific range. You have to wait for the candle to close. There can't be any divergence. All of that needs to be in place. So I'm going to pause here. That's it for my chart presentation. And you should be able to see the last slide. So let's move on. Let's move forward. So this is just the tip of the iceberg. There are countless opportunities to make money in Forex, and I want to personally help you implement this system into your daily trading routine. The trades that I've executed, these were real trades that I've executed with my own personal account with the Trade Copier. So you've been watching this webinar with me now because you know that you need a solid, robust trading system in place that will allow you to safely make money. And that's why I developed the Best Forex Trade Copier service. It's the same program built on my experience since I started trading in 2001, and my Trade Copier service solves the biggest problem in Forex. If you don't trust yourself, if you've made some big mistakes, if you've blown up a few trading accounts, if you're afraid, or if you're just learning, or if you're sort of done with it, right? Maybe you've already tried it and you're thinking you just can't do it, but you love the idea of trading. You know that there's money there, and you want somebody to do it for you. That's why I put together this service, to help you. So the biggest problem, again, it's estimated that 95% of all traders will lose their money, somewhere right around that range. And to make matters worse, over 40 million Americans right around this time, at the time that I'm making this presentation here, over 40 million Americans have filed for unemployment during the pandemic. And it's affecting other countries in most of the same ways. Many are trying to start online businesses, many people that have been laid off, and we're seeing a massive wave of new traders enter the business of, Forex, Bitcoin trading, trading stocks. You've heard Robinhood. we see updates on that every single day. And for many of them, it's not going to end very well. Imagine starting off hopeful and excited with a sense of being able to support your family and working from home, being able to step up and protect your family. But if you lose your money, you will end up with a failed attempt and looking for something else to do for work. Like, you're going to have to go out and get another job. You're going to have to go out and start something else. I've met many traders who start off with the best of intentions, but they quickly lose it all. They're out of control. They don't seek help. They don't stop. And some of these people that lose all of their money, I've seen them. I've traded with some of them in these chat rooms. There was that chat room that I mentioned I joined back in 2001 for $149. He ended up getting a divorce. There was a guy in the chat room. I never forget the day. He was always pretty chatty. I could see that he was like pretty wild with his trades. He was always typing in when he was getting into his trades. And he was also executing the trades that these guys were calling out trades in the chat room, right? These guys didn't have the experience. They were totally inexperienced individuals operating the chat room. So it was really their fault, but this guy was making it worse. Total gambling mentality. And all of a sudden, the last day, he says, well, guys, that's it for me. He says, I blew up my whole family's trading account, and I'm out of this business, and I'm never coming back. A few of them had actually said that, they blew up smaller trading accounts, and that their wife had told them that if they did it again, she was going to divorce him or leave him. She couldn't handle it. It's horrible. You can lose your relationship and end in deep, deep depression. Trading successfully and profitably isn't easy. It takes years to learn how to read the markets, and professional traders that have been in the business for 40, 50 years or more, they never tell anyone how easy it is. They dedicate their whole life to learning about the markets and constantly work to keep their trading edge. It makes me cringe when I see people in YouTube videos and Facebook tell their followers how simple and easy it is. All you have to do is buy their trading system that generates a buy or sell, on the screen. And I know that a lot of people are getting hurt financially. The solution: if you can get it right, you can earn unlimited profits. Unlimited profits meaning, according to, of course, your, the capital that you have in your trading account. Earning 300, 500, 700 pips a week or more is very possible with my MT4 trade copier. Now, I don't make 300, 500, or 700 pips every single week. Sometimes I only make 150 pips in a week. It really depends on the market conditions. But there have been some months where I've done a lot more than that, and some weeks more than that. My trade copier subscribers all have different reasons for using my service. They either want to learn how to trade, but they don't have the time or the experience. They've tried to trade in the past and they didn't have a good experience, and they no longer want to do it themselves, so they let me trade their account for them. Some others are also interested in the second source of income, and they don't have to do anything to profit from my service because I'm executing all of the trades for them. My trade copier service is unlike any other signal service or trade or copy trade service out there because you get me, a seasoned, experienced, and tested Forex trader with over 19 years experience trading for you. None of the other services on the internet can give you that, and most of them just don't have the experience or the knowledge. But my trade copier isn't for everyone, and there are limited subscriptions that I have each month. This trade copier only works on the MT4 or MetaTrader 4 platform. MT4 is short for those of you who are new to the business. And occasionally I do sell out of my subscriptions, and that forces new subscribers to have to wait 30 to 60 days before I have available subscriptions. And I only accept new subscribers that understand that they won't see their trading account double in size in 24 hours. Every once in a while, somebody will send me an email and they'll say, and I know that they're getting this information because they're being misguided by some of these other people that are out there that don't have enough experience, or they're trying to mislead them to sell them something. And somebody will say, well, how long will it take for me to double my trading account? I've got $2,000 in it, and will it happen in a few days or a few weeks? And I think, wow, I feel bad for this person. Number one, where did they get this information, and where are they getting these ideas? It doesn't work like that. As long as you know that it doesn't work like that, and you know that trading is a day-by-day game. Every day is different. Some days are much, much better. There are only certain days of the month that I'm going to get really good moves. We see that. I just showed you a couple of charts here with consolidation that's been in place on the pound yen for the last week. It's Thursday today, and consolidation has been going on for a while, most of this week. I don't have too many trades on that pair, and that's going to limit the amount of profits and the pips and how much I can grow your account. So if you're aware of that and you're ready to realize that it's a long-term game, this doesn't always happen. There are days when we can make huge profits because the market gives us that opportunity, but I can't make that happen if it isn't there. So how it works: step one, you purchase the monthly subscription. Step two, you connect your MT4 account in 10 minutes or less. I'm going to show you how to do that in just a moment. Step number three, basically you sit back and watch the profits roll in. Now, I know that sounds too good to be true, and the only reason why it sounds that way is because you're not doing anything. If this was a trading system and I was teaching you my system and you were to have to execute it on your own, then the results would be very different, and I wouldn't say sit back and watch the profits roll in. The fact that I'm executing these trades, and these are my techniques, my strategies, and my trades, I know what I'm doing with the trades. So it's easier for me to control them, and it's easier for you to net results and profits because I'm doing the trading. I'm controlling the situation. Again, if I was to teach you my strategy and then say, here you go, good luck, let me know how you do with it, then things are going to be very different, right? That you get different results, and I would not be able to say that you can sit back and watch the profits roll in. Now, you can use the trade copier with a live account or a demo account anytime. You can switch them out anytime you want. And if you change brokers in the future, whether it's 1 week away or 1 year later, you can simply add the new account to the trade copier. You can change at any time. You can add more money to your trading account. It doesn't make a difference. because you're going to select the leverage and lot size that you want. So you can also turn off the trade copier anytime you like. You can also log in to see the trading results anytime, and you can log in on your mobile device. So if you've got, let's say, the MT4 platform the MT4 app installed on your phone, you can log in and see the trades in real time. You can also execute trades of your own at the same time on the same account, the same one that I'm executing trades. It will not affect the trades. It may affect your performance. You might have some good trades and some bad trades, and obviously it's going to change ultimately. But I do have some subscribers that do trade the same account. I also have many subscribers that just set up one trading account, and they use the trade copier with it, and they don't touch it. They just let me trade that account for them. And again, you get to select the leverage and the lot size that you want to use. It doesn't matter if I trade a standard lot. If you want to trade micros or minis, that's perfectly fine. That's okay. It's all up to you. And it will work with just about any MT4 platform around the world, anywhere. It will always work with any MT4 broker. You just need to be using the MT4 account. So if you open up a trading account, it can be $50, it can be $100. There is no minimum and there is no maximum. I have some subscribers that are using well over $100,000 in their trading account. Other subscribers are using $500. Other subscribers are using $100. You can also, like I said, use it with a demo account. So it's up to you how much money you want to put in your trading account, whatever you're comfortable with. The trade copier will also work with 4- and 5-digit brokers, and it will work with brokers that use that extra character or suffix, the symbol. Now, this particular program has helped my personal students earn the following results. These are screenshots sent in from my subscribers, my trade copier subscribers. Now, some of this, you'll see the growth. Everybody has the ability to control, whoever uses the trade copier, they have the ability to control the lot sizing and the leverage that they use. So here you can see the profit and the balance. They control the lot sizing, so they can experience the growth on whatever level that they want. I just simply execute the trades. I can see the balance on my end, but I cannot see the trade details like your account number or your password. I can't see things like that. That's what the system through Social Trader Tools is designed to do, to protect you and to keep both me and you sort of separated to a certain degree, but at least connected through the trade copier so that all of my trades are executed through the system, and it's instant. It's instantaneous. There's no delay. There's no lag time. I know every once in a while somebody will ask about the lag between when I click to execute a trade. How long does it take? Is there ever a time that it's down? As long as I've been using Social Trader Tools, I have never seen their system down. So again, 59% growth within just a few weeks. This is another account, 364% growth in a very short period of time. Here's 183% growth. You don't have to trade. You don't ever have to trade again to experience profits like that. And there's no profit sharing. You keep all of the profits. All the profits are yours to keep. You just pay the monthly subscription service, which is something we're going to talk about here in just a moment. And it's relatively easy to set up. Again, it takes less than 10 minutes to set all of this up. And then the system's off and running. And this is one of the screenshots on the reporting that you can actually set up for yourself. You can, again, I've mentioned that there's pie charts and growth charts and all kinds of things. You can compare currency to currency and take a look at which ones I tend to trade more often. All kinds of information is there available to you when you log into. You have your own dashboard area where you can log in and see this stuff on a regular basis. So these are also some subscriber testimonials that I receive through email. This one read really great stuff. This one goes back a while. This is an old subscriber of mine, and inside the email it read, just want to drop a line and thank you for the material that you sent me the other day. You really did not have to do that, and I really appreciate it. You're one of a kind in this business, one of the good guys for sure. The new material is really fantastic. Last night I traded just one of the setups you showed, and on 3 different pair made over $2,000. This student was actually a coaching student, and then he operated a business. He didn't have like a full-time job. He was actually operating a business, and then he could no longer manage his trades, and but he wanted to learn my trading system, and now he uses the trade copier exclusively, and he gets trades just like this. He never has to execute another trade, and he's fine with that. He's comfortable, but he was really interested in just at least giving it a try, and now he knows my trading system, so he understands what he sees when he looks at his account balance. This was another subscriber. The email read, "Dear Joseph, thank you for the reply. I appreciate it a lot, and thanks for all of the trades that are popping in positively. I just woke up with $974 USD profit with the Euro Yen trade that you took. I finally found an honest signals provider." Another subscriber sent me a message and it reads, "Joseph, I'm one of your new subscribers. I just started using your service after you changed it to a monthly service, and I can't tell you how happy I am. Since Friday, May 22nd, you have made me just a little over $923 in my real account. I know that I should be prepared for some losses, but this is fantastic, and all of this in 3 trading days. I am looking forward to more." I want to share a few. I want to say a few things, but I want to share some more insight with you as far as losses. This is another question that I get. Like, what would be a typical losing streak? Have I, is it lengthy? Do I have like major serious drawdowns? And I see it. I see it with a lot of other services. Like sometimes you can click on some of these signal services, other websites, and they host a whole bunch of other traders and their performance. And sometimes you see some real big drawdowns. I don't experience drawdowns like that. I might have 1 losing trade, maybe 2 losing trades in a row, but the losing trades are very, very contained and very controlled. And I can often see and detect that a trade isn't going to work, long before it hits my stop loss. So when I say that my largest stop loss, the largest stop loss that I would ever consider using is 55 pips. Even on the pound yen trade, the pound yen trade on the continuation breakout trade, if I'm going to earn 250 pips, I still can get away with using a 55 pip stop loss with that strategy, that technique. But even if a trade fails, one of those continuation breakout trades fails, I don't necessarily have to sit and let it hit the 55 pip stop loss. I can usually cut it off a lot sooner. So maybe the loss would be 27 pips, maybe 32 pips, something like that. And then I just move right on. Usually most of my losing positions are going to be about 15 to 20 pips. Somewhere right around there, sometimes 25 pips. And again, I could have 1 losing trade, but I can earn back that loss in the very next trade or 2. It's just a matter of waiting for the setup. I don't blow up trading accounts. I don't have losing streaks that go on for weeks or months at a time. I don't use, I don't remove a stop loss if a trade doesn't seem to be working out, and I've already had a couple of losing trades. I know that a lot of people get frustrated like that. So they'll have a couple of losing trades and then maybe the 3rd losing trade, and then they're thinking, well, I don't want to use a 55 pip stop loss. They don't want to take the hit. They don't want to take the loss. They don't know how to control it. And then they end up using like a 250 pip stop loss or something like that. I've seen it happen. I don't do that. I've never done that, and there's no reason to do that. Again, my trading system is very, very structured. So with each one of the strategies and techniques that I use, I always know exactly where I need to get in. I know exactly where I need to take profits. I don't mess around. I lock in profits at the expected take profit level, and that's it. I move on, I wait and reset and look for the next opportunity. So I'm currently trading 8 different currency pairs. They're available on the website. If you look at the FAQ page, you can see which currency pairs that I trade. I trade the majors: euro dollar, pound dollar, dollar Swiss, dollar yen. The yen crosses, euro yen, pound yen, and then the Australian dollar and the dollar Canadian. Another subscriber sent me a message and it reads, "Hi Joseph, thank you so much. You don't know how thankful and grateful I am that you set up this service for me and others like myself. I was literally jumping up and down after I read your email. You have just given me and my family the best Mother's Day gift ever. I feel like a ton of bricks has been taken off my shoulders. Thanks again for sharing your talent and time in trading the Forex market with me. You truly are a gift from heaven." This was a subscriber that was actually just setting it up. She worked full-time. Her husband worked full-time. They had a big family. And she had tried trading, but just knew she didn't have the time for it. And was hoping that maybe one day in the future she could get around to it. But in the meantime, she wanted me to trade their account for her. So she set up the account and then, of course, linked it to the trade copier. And it's like a second source of income. So this would be another way, right? I even have some retired individuals that are trying to supplement their retirement fund, whatever, maybe a supplemental income that they're looking for at the same time, or to fund a retirement. Another subscriber sent me a message and it reads, "Hi Joseph, I wanted to tell you how happy I am with your trade copier service. I bought it a few days ago and I've already earned back what I spent to buy your service. This is incredible. I already have 59 pips. I earned just under $580 so far. I can't believe this. Please keep up the good work. I'm looking forward to using this service all year." Another message reads, I was going to give up on trading. I was going to give up trading, but then I found your website and watched some of your videos several times, and I just knew you were the guy that could really help me. I want you to know how much your help means to me. I can't believe I'm finally making money, and what's more, I'm keeping my profits, not giving them back. I made $947 last week, and I've never done that before. I owe it all to you. You're the best, Joseph. This was a screenshot of an MT4 account, I believe. It reads, freaking amazing, not what I expected, but I'll take it. Over $2,100 in 1 week. This was a live statement from a subscriber. 1 week's results with the trades that I executed with the trade copier. Obviously, this individual was using I believe, a standard lot on this one. This is another one. I believe there's standard lots on this one as well. $514 in 1 day. Subscriber statement after 1 day's results. Obviously, I am going to say this. I've got to say it. Don't expect $514 in your trading account. I can't tell you that you're going to see that. Like, it really depends on what lot size you use. It depends on what your account balance. If you have a $50 trading account, you can't use a standard lot or half a standard lot and then expect $514. Just be realistic about it. Again, call your broker, find out what the best lot size is for your account. And then there are some lot size calculators out there. I know Baby Pips has one. It's pretty good. And you can play around with a couple of different variables and try to see, what kind of profitability you could earn based on the lot sizing that you select. This was another screenshot. I believe this was a cell phone screenshot and a subscriber statement. This was, I think this was the dollar Canadian trade that I was talking about. So I mentioned earlier that we had a continuation breakout trade a while back. So this was actually, I had mentioned it was like 3 or 4 weeks ago, pretty close. And this was 171 pips profit on this trade. And it was a half a standard lot. You can see the 0.5 they were using on this trade. So this one particular trade resulted in $626 for this subscriber. Each subscriber is going to see different total net profits because of the lot sizing that they select. It's always going to be different. But the number of pips is always going to be the same, right? We're all going to earn the same number of pips as long as you're using the trade copier and it's on. Everything's fine once you're connected. As I mentioned, you don't need VPS. And once you connect it, you can turn off your computer and just check with your cell phone or log in, your dashboard and see the results. But this one was a really great trade. Continuation breakout trade. Again, I was able to find the continuation breakout trade on the dollar Canadian on the 4-hour chart, but then it also gave me a continuation breakout trade on the 1-hour chart, which gave me my entry. But I was able to hold on to it a lot longer because it was also a bigger time frame trade, and that's why I was able to squeeze out the 171 pips on that trade. I don't do that every day. I can't do that all the time. But when we get the opportunities, it certainly does. This was an example and like a case study that we did. So I get the question, I've been offering these services since 2007. I've been calling out these trades, executing these trades with the trade copier. So the graph right here shows the total profits, total dollar profits each year using, if you were to just use one mini lot. So that would be approximately $1 per pip. And let's say you were starting off with a $2,000 trading account. What would be the results? I get this question every once in a while. What would be the results? So you can see here in 2007, total net profits on the trades that I executed was 10,441 pips. So if you were using a mini lot earning approximately $1 a pip, that would result in approximately $10,441. So again, at $1 a pip each time, you can see how it continues to grow. And the results here as of, I believe this was 1 month ago. So I apologize. It really hasn't been updated, but it's grown considerably. So since 2020, 1 month ago, if you were using the trade copier when I started and you got every trade with a $2,000 trading account and you didn't take out any profits, and this is, of course, not adjusting where you could increase the number of lots, right, or the lot size. This is just assuming that you would have stuck with the typical mini lot earning approximately $1 a pip. The account would have grown to $142,910 at this point. That's the total number of pips earned with my execution since 2007. So this system has a proven track record. It carried me through the global financial meltdown and every other major and minor market crisis since I started trading. And in case you're wondering how it will possibly work in the future, communication back and forth with one of my other subscribers, this was a while back, he said, I must say that I'm impressed that your trading methods haven't changed much in all of these years. And that says a lot about the methods that I use. And what he meant was that, and I see this too, I see people that have been around in this business offering services like mine, and then they tend to change their trading system every so many months or every so many years. And I don't personally understand that. I'm not saying that it can't be done. I'm not saying that at all. But I just don't understand their way of trading. But it seems that they develop simple little systems that, for whatever reason, break down, and then they can't use them anymore. And then they start to develop new scalping strategies and other little strategies, and they tend to jump around quite a bit. And that isn't something that I did. They may have improved their trading system, but the core principles of the trading system remain intact. So when people change their trading systems a lot, I don't really understand that. That tells me that maybe they don't really have a good grasp on solid core technical analysis and execution, the principles, or maybe even mindset. It could be even, a mindset issue for them, and that's what's causing the problem. I really don't know. I don't know their systems. But again, I've never really changed my systems. I've improved them. But the system, the 3-pip entry, the structure, all of that, it's always been the same for me. I've never had to change it. No matter what type of market environment, what was going on, it's always worked the same. So these are my results and the results of some of my students. And my results and their results are not typical. And again, they're to show you the power of using a proven system like this. And I'm not guaranteeing that you or anyone else will experience the same results, because using this program requires action. You would have to take action. You would have to make a decision. You either learn to trade this on your own, you either learn how to do it on your own, or you use a trade copier service similar to mine and allow me to trade for you. And the other advantage is, if you did something like that and then you decided you wanted to learn how to trade, it's a different approach, right? You get to see the profits coming into your trading account, and it's not stressed. It's not a stressful situation. You're looking at profits, and then you can dissect the information. You can analyze the trade and say, I see what he's doing. And this was the net result, the profits. I can see where he got in. I can see where he got out. He said that it was this kind of strategy or that kind of strategy. It's a lot easier to learn the system a little bit later on if that's what you're